Hello everyone. Today we're going to talk about the UK fourth quarter GDP figure, the US merchandise trade balance, US wholesale inventories, US new home sales, and the Japan CPI. This is Marshall Gittler, head of investment research here at FXPRIMUS, bringing you my opening market comment. Well, the focus during the European day will be on the British fourth quarter GDP figure. It's expected to be up 0.5% from the previous quarter. That would actually be a small slowdown from the previous two quarters, which were both plus 0.6% quarter on quarter. On the one hand, it's pretty good, and it does show that the UK economy has so far weathered the Brexit shock successfully. At the same time, it is a slowdown. So I expect that the figure will be basically neutral for sterling unless it comes out substantially different than expected. When the U.S. market opens, the U.S. announces its advanced economic indicators, which includes the advanced U.S. international trade in goods and advanced monthly wholesale inventories. The U.S. goods trade balance figure has been a second-tier report in recent years, but it's likely to become more important as the Trump administration focuses more and more on trade. This month's figure is expected to show yet another extremely wide trade deficit. Now, it'll be interesting to see if the market interprets that as negative for the dollar, which would what it normally would be, or nowadays they might interpret it as positive for the dollar if it's perceived as keeping the heat on those countries that run a trade surplus with the U.S. In any case, the impact of the trade figure, that number, is hard to untangle from the impact of the wholesale inventories figure that's released at the same time. Growth in inventories is expected to fall back to a relatively sluggish 0.1% rate after November's surge. This could be interpreted as negative for growth and therefore negative for the dollar. New home sales are expected to fall from the previous month. That should be negative for the dollar. But Tuesday's existing home sales figures showed that a fall could prove positive if the reason is that there are just so few houses for sale. Finally, overnight we get Japan's various measures of the consumer price index. Most of the measures are expected to show inflation slowing or deflation worsening. This is in contrast to the trend of higher inflation in the US and Europe. That's likely to be negative for the yen. This is Marshall Gittler, head of investment research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.